Hey guys, it's Nick. Walmart came out and said that weight loss drugs like Ozempic are making people buy less food. So, is this the end of junk food and soda and obesity as we know it? And is this the reason that dividend paying food companies like Coca Cola and Pepsi have been sliding recently? Or is there a lot more to this story? I'm going to look at the data of how much less people are eating and the so called projections for the future. Is it a good time to dump these dividend stocks because of Ozempic, or is this hype overdone? I'm going to look at some of these food stocks and also take a look at how much the recent bond yield increases may play a much bigger role in the price drops than the whole Ozempic story. So let's take a look. So here's the article on Zero Hedge. And so these anti-obesity drugs are known as GLP-1, and there are things like Wegovy and Mounjaro by Novo Nordisk and Eli Lilly. And so they say these drugs are going to cause a food revolution that could stop people from eating as much junk food. And so just a small deviation in that could affect the $1 trillion per year US food market. So the CEO of Walmart says, we definitely do see a slight change compared to the total population. We do see a slight pullback in overall basket. Just less units, slightly less calories. Now, is this because people cannot afford to buy as much food because of inflation, or because Ozempic costs about $1,000 a month if you don't have insurance? I'm not really sure. But if you weren't already scared of all the cameras that face you in Walmart as you walk in, here they say the retailer was studying changes in sales patterns using anonymized data on shopper populations. And so they say they compare shoppers who pick up a prescription for those medications at its pharmacies to shoppers who are otherwise similar but aren't filling those scripts at Walmart. And so it then looks for patterns in the spending of these groups, and it says the first group is buying less food. So they also said in August that the growing popularity of the drugs was helping its sales, although clearly not of high-calorie fast foods. And so Walmart says through its pharmacies that these drugs are giving the retailer a revenue boost, and US sales for these medicines have increased 300% between 2020 and 2022. So is this just one big ad for Ozempic that Walmart is rolling out so they could sell more high margin Ozempic at its pharmacies? Maybe. So while some CEOs and investors are worrying what's going to happen if people eat less calories, what's it going to do to their business, some CEOs aren't giving up on the prospect of the obese American fatso with an incurable penchant for cheap junk food. And I would bet my money on this. So the CEO of the new Kellogg's spinoff, Kellanova, which makes Pringles and Cheez-Its, said the company is studying their potential impact on dietary behaviors. And they say, we'll look at it, study it, and if necessary, mitigate. So maybe they could come out with a Cheez-Its sprinkled with some Wegovy or Ozempic on it. So he goes on to say, who's going to cover it? Meaning the insurance companies are not yet covering it. Who's going to be on it? And do they stay on it? And these are really big questions. And so he threw some dirt out there saying there's growing stories about the secondary effects of it, so we're studying that. So Morgan Stanley did a whole lot of research on this and their projections for how many people will be using it by 2035 and how much that will reduce the actual US calorie consumption. So this doesn't mean per person, it means for the whole US. So they project that their base case is 7% of the US population will be on one of these kinds of drugs, which is 24 million people. But this is projecting into 2035, which is a long way off. And so the optimistic case is 8% or 30 million will be using it. And the bearish case is only 5% or 18 million will be using it by 2035. Now remember, this is going 12 years out, whereas all the so-called experts and analysts a year ago would not have made the prediction that the 30-year US bond would hit 5%. So not only can they not predict 1 year out, most of them cannot predict if it's going to rain in 5 days. So take this with a grain of salt. So let's just assume the base case, they say a reduction of minus 1.3% in total calories. So it doesn't mean each person that's on it is going to have 1.3 calories less. They may eat 500 calories less, but the net effect on all the calories consumed in the US will be about 1.3% less if 7% of the people uptake this drug. And so this is a survey of people who are on these drugs and how much they consume more or less of each of these categories. Now, you got to think this is biased because if you ask fat people, are they eating more fruits and vegetables? Of course, they're going to tell you yes. And are they eating more cookies and carbonated sugary drinks and candies? They're probably going to say no. But anyway, this is what they reported on the survey. So basically, blue is they're consuming more of this, and green is they're consuming less of this. And these numbers are the blue minus the green. So in other words, fruits and vegetables, net 46% are consuming more fruits and vegetables. 31% are consuming more weight loss management foods, and 23% net are eating more poultry and fish. And so, of course, the people saying that they're eating less confections, sugary drinks, cookies and baked products, alcohol, salty snacks, preserved meats are like 60% or better. And so that survey said that the fast food and pizza restaurant trips that they take now that they're on the drug has also decreased. And so looking at it the same way, more frequently minus less frequently is the net change. Coffee shops, casual dining, and the worst are pizza restaurants 70% less and fast food 73% less. Is that why Domino's is not doing that good? I don't know. And so they asked them, what is the degree of cutback in confections, cookies, salty snacks? And so the blue is significantly decreased, meaning that they decreased 75% or more. And you see all these categories are like 30% or better. And the red is stop consuming this entirely. And even the green is moderately decreased between 51 and 75% less. And so they show confections, sugary drinks, baked products, salty snacks, alcohol have the biggest decreases, at least according to the survey. And so this is how much they say the consumption in these categories will decrease because of these drugs. Sugary drinks, 2.8%, cookies and baked products, 2.7%, salty snacks, 2.4%, all the way down the line. However, again, this is a projection going to 2035. I would bet that if we look back in 12 years, we will probably see sugary drinks, baked products, salty snacks actually increased. So let's look at some charts. This is a monthly chart. This is a weekly chart. This is a daily chart. And this is of the XLP, which is the Consumer Staples ETF, which includes Coke, Pepsi, and other food companies as well. And you see, it's held up pretty well until about July when it fell from about 76 to 67. Ozempic's been out for a while, so why this drop now? More likely, it has to do with bond yields. So here's a chart of Coca Cola, similar to the XLP chart, just started falling recently, like July. Same with Pepsi, whereas something like Hershey's started falling earlier. Hormel was falling since a year and a half ago or two, right? And even things like Procter & Gamble, which is not food, has also fell from 158 to 143 since around July. So a similar drop. And so if you look at consumer discretionary, something like Home Depot has also been falling since around July as well, right? So it's not just McDonald's that has been falling because of Ozempic or something like that. And all that pizza that people said in the survey that they weren't eating, Well, Domino's is actually holding up pretty well over here. So if you look at some other sectors that are dividend heavy, like the XLI, which is the industrials index, which is things like FedEx, Caterpillar, John Deere, they have also had a very similar chart since around July. And this is the XLU, which is the utility ETF, which has taken a very big hit since around July as well. It's actually back to 2020 lows. So what's a more likely cause for a lot of these dividend paying stocks start falling since around July? Well, the Wall Street Journal talks about it. A new interest rate regime has begun. These are the market's winners and losers. So they say even the big tech stocks are starting to show cracks. Nvidia, Tesla, Apple, and Amazon. Here they say the US dollar has risen more than 5% since mid-July, driven by surging treasury yields and strong economic data. And so why hold on to these stocks like Coca Cola yielding 3% or utilities or McDonald's yielding 2 point something percent when you can get 5% on a 10-year treasury yield, or almost 5%, or 5.5% on a treasury bill with no risk? So they say steady income from stocks doesn't hold the same appeal it used to. Fewer than 30 stocks in the S&P 500 have a dividend yield above that on the 6-month treasury bill. So this is a big shift from the past decade when interest rates were near zero and hundreds of stocks within the index offered higher yields. So at the end of 2021, before rates began to rise, there were 379 index constituents that offered a better yield than the treasury bill. So why hold these dividend paying stocks when yields are rising on risk-free government bonds? And so besides, these stocks aren't offering enough extra yield to compensate for the risk of a slowdown in business activity. So there you have it, guys. I think the majority of these moves are because of what's going on in the bond market. And this news about people eating 1.3% less calories in 2035 and knocking down Coca Cola and Pepsi by 5%, I don't really buy it. However, they are already in a downtrend. And so we are in a situation where bad news equals horrible news, where if we were in a bull market, bad news is sometimes good news. And so even bad news wouldn't make the stock drop. But when we are in a bad market, then even small bad news will have a big effect on stocks. So if Coke and Pepsi and these other companies really fell because of Ozempic, then I would say it might be something to look at if it falls enough that the dividend is close to the yield on the 10-year note. But if the reason for the drop in food stocks is the same reason for the drop in utilities and industrials, then we could have a lot of room to fall if you think interest rates are still going higher. So where do you think interest rates will be in a year? Well, your guess is as good or probably even better than the so-called experts that are paid to constantly paint a rosy picture so their clients don't get scared out of stocks and bonds. Invest accordingly, guys.